these A and B both are important, because on A basically it's totally forex, and B basically C and D are dependent on B. Module C and D are dependent on B. Okay. So risk management, C is treasury management, and D is balance sheet management. D means what? This is related to your transparency, governance. Means it's mainly related to your Basel 3, Pillar 3. Okay. In Module A, you have these total 12 chapters, 10 chapters. See this. Okay. Exchange rates in forex business, LRS, and other remittance facilities, correspondent banking and NRI accounts, documentary LC, financial services center and gift city, technology and international banking. This is all module A. Module B is having 9 chapters. This eight chapters. Risk and basic risk management framework, risk in banking business, risk regulations in banking industry, market risk, credit risk, ops risk, liquidity risk management, and Basel 3. Now look at this. If you look at this now, everything is related to look at this. Risk means totally related to risk management. And that's why I said it's one of the most important modules. Okay. Module C, this is theory topic mainly. Numericals are there, but almost 70% theory over here. And this is a smaller topic. C and D are smaller. So 3 plus 3 is 6 and 7. 7 chapters over here. All these are mainly theory only. Introduction to treasury, treasury products, international equity and debt products, funding and regulatory aspects, treasury risk management, derivative products, treasury and asset liability management. Am I audible, everyone? Audible, no? Any problem? Voice, video, nothing, no? Module D, balance sheet management. Components of assets and liabilities in bank's balance sheet. Okay? Means what are the assets and liabilities? Asset means loans. Liability means deposit in bank's balance sheets. Capital adequacy Basel norms. Asset classification and provisioning norms. Now these are all dependent on your module B. Liquidity management, interest rate fund management, and REROC and profit planning. So all of these C and B, they are mainly C and D mainly dependent on B. Okay, these. That's why if you do module B perfectly, C and D will be easy for you. Okay, it will be easy for you. Got it, everyone? Chalo, let's move on now. Let's start with the case studies then. Module A, we will be dealing with module A case studies. Okay. First, I'll start with the basic, then I'll move towards a tougher one. We have very less time, means hardly how many 20-25 days for this. Okay. And we have to cover the all the case studies. So we'll be moving a bit fast. Okay. So spot rate. See this. This is a forex problem given. Similar problem will be given to you in exam. Spot rate is given as 75.6055. Forward is given. Forward for 1 month is given as 3500 and 30,000. 3,000 you can call it. 2 months is given as 5,500 and 5,000. 3 months it's given as 8,500 and 9,000. Transit period is 10 days. Exchange margin is 0.15%. Find a bill buying rate. Now look at this. Everyone. First pay attention to whatever I am saying over here. In any numerical of forex, first you have to decide. First step. Okay. You should decide is whether to buy or sell. Second is what are the forward margins. Third is what is the TT margin. Okay. Buy or sell, forward margin, and TT margin. These are the 3 basic steps in any forex problem. 3 basic steps. Okay. See this. First is buy or sell. Look at this. Everyone pay attention to the cursor. Then forward margin and then TT margin. These are the only three steps which you should follow. If you follow this, there is no chance that you'll get your problem wrong. Okay. So here it's clearly mentioned. Find a bill buying rate. Buying. So it'll be used as buy. Your case this here it will be buy. But if it is not given in the exam, whether it's buying or selling, you have to find out, let's say. So how will you find out in that case? If it's not given. So in that case, remember, whenever you're doing the exports, okay? Whenever you're doing the exports, then remember you are doing the buying rate, buying. Export means buying, okay? Whenever you're doing the imports, remember, whenever you're doing the imports, it's always selling. So let me write it over here. For those who are new, okay? Those who are already there in the regular batches, they'll know it. So export equals to buy and import equals to sell. Keep this very simple. Import equals to sell. Okay, number one. Number two, this is basic buy or sell. Okay, basic buy or sell. Export equals to buy, import equals to sell. Now about the forward margin. What about the forward margin? See this, forward margin means I gave you three steps. One is buy or sell. Second is forward margin, right? Buy or sell, and second is forward margin. If you are here, if anybody is not having any audio video, kindly log out and log in, because sometimes in internet it happens. Okay. So forward margin. Always remember there are two rates given like this. This is buy and this is sell. Okay. See this 3500, 3000. So left side buy, right side sell. Bid or offer. We call this bid or offer also. See this. Here it might be given somewhere. Yeah. So it's bid or offer. Okay. So buy equals to bid, sell equals to offer, equals to ask. It is called as ask also. Anything can be mentioned over here. Okay. Buy equals to bid, sell equals to offer or ask. So always remember, when your right side is lower, this right side is less than the left side. It is called as discount. See over here. Right side is less, 3000 and 3500. So right side is less. So it is called as discount. Whenever left side is smaller, right side is bigger, then it's called as premium. Okay. So left smaller than right. Right. Okay. Then it's called as premium. And vice versa. Right smaller than left, it's called as discount. So for forward margin, this is the logic. Next is for TT margin. TT margin, or they call it exchange margin, anything. TT margin, exchange margin. Okay. For TT or exchange margin, the rule followed is whenever you are buying any currency, buy. Okay. Buy. You'll always subtract it. Subtract the TT margin. Whenever you'll sell, you'll always add the TT margin. Okay. So these three basics you remember always in any forex problem, any, and follow this sequence only. Firstly, export, buy or sell. Second is forward margin. Third is TT margin. Okay. So now let's start this problem. First thing is buy or sell. So it is buy. Okay. It's already given buy. Now about the forward margin. Now in forward margin, remember what is given. See here. One more point in this. Many of the students think that, see, suppose if I ask you 75.6055, is this currency in premium or discount? So many of the students say, sir, discount. Why? Because the right side is smaller. But the point over here is always remember, premium or discount can never be got, which you can never get any premium or discount on the spot rate. Premium or discount will always be arrived at when you know the forward rates. So if somebody asks you on the spot rate whether the currency is in premium or discount, you can never tell anyone. You say we don't know, because on the premium on the spot rate you can never decide the premium. Premium is always decided on the forward rate. So for 1 month it's given. Now from year I can say the currency is in discount. Why? Because right side is smaller, left side is bigger. But from year I cannot say. Okay, because this is a spot rate. Got it? So now the currency is in discount. Second step. So let's solve this discount part first. Transit period is given as 10 days. Now 10 days means what? This 10 days will lie between what? 10 will lie always divided in the months. 0 to 30, 30 to 60, 60 to 90, 90 to 120. Divided like this in terms of months. 0 to 30 means 1 month. So now this 10 days will lie between what? It will lie between 0 to 30. Okay? So 0 to 30 means, 0 means what? Your spot rate. Always remember, 0 is your spot rate. Here. It's like this, divided like this. Okay? Your 0 to 30 to 60 to 90. Bas, that's it. Only you require up to this only. So this is always a spot rate. Spot. This is always 1 month. 1 month. This is 2 month. And this is 3 month. Okay. Whenever you are given 10 days. So 10 days will lie between what? 0 to 30. So here it will lie somewhere. Here. So if you have to find out the rate for 10 days, always follow this 0 and 30. Okay. This condition will arise when you don't know the exact rate on the 10 days. This is known as buy low, sell high maxim. Buy low, sell high. So now what you do? You get the rate for 0 and 30. Now, importantly remember, this 60 and 90, whatever is given to you, this is of no use to you. Means 2 months and 3 months is of zero use to you. So cancel them. See this, cancelled. 2 months, 3 months cancelled. Not required at all. We require only spot and 1 month. So take this now, 75.60. Now will I take 60 or 55? I am doing buy. Buy means left side. So I'll be taking 75.60 and here 35.30. So I'll be taking 35. See this is after the point. So it is 0.35 actually. So 0.35. Okay. Now what should I do with this 0.35? Now this currency is in premium or discount? This currency is in premium or discount? This currency is in discount over here. Look at this, 35.30. Here you tell me premium or discount? 55.50. This currency is in premium or discount over here? 55.50. So here it is again. Who can tell me? This currency is in premium or discount? Discount, right? 2 months also discount. What about the third month? Look at the third month. The currency is in premium or discount? Third month. Third month it is premium. Why? Because the right side is bigger. Okay. So it depends. Here, these are all hypothetical figures. So third month it is in premium. But do I want it for third month? No. 2 months and 3 months are of no use for me. I only require 0 and 30. So here it is in discount. So look at this 35. Discount means what? Minus. Right? So what will I do? 75.60 minus 0.35. 75.60 minus 0.35. So it is 75.25. So now you have two rates, 60 and 25. These are the two rates. Now you have to follow the buy low, sell high maxim. Always. Buy low, sell high maxim. This is called as maxim. Maxim or theorem you can call it. Okay. So 75.60 and 25. So you are buying now. So it will be buy low. So which rate will I take? I'll take this 75.25. This is of no use to me now. Okay, 75.60 is out. I'm taking 75.25. Why? Because buy low. Now, is my answer over? No. Here, there were 3 steps I told you: buy or sell, forward, and third one was TT margin. We have worked up till now point number 2 only. Point number 3 we have not worked. So now we'll start point number 3. So 75.25 into what is the exchange margin? 0.15%. So 0.15 upon 100. 75.25 into 0.15 upon 100. Percent. Percent means divided by 100. So it is 0.112. Multiply this, you will get it as 0.112. Now what do I do with this 0.112? Do I add this or do I subtract this? So I'll have to subtract. Why subtract? What did I say about TT margin? For buying we subtract, for selling we add. So here we are buying. So subtract 75.25 minus 0.112. Do this. See here 25. It means 0 will be over here. If it's 3 digits over here, take 3 digits over here. So 75.250 minus 0.112. Subtract it. So 75.138. This is your final answer. 75.138. Okay. If in exam they tell you to round it off to the nearest to 0.25. Is it tell you to round it off to the nearest 0.25? Then what do? You find out the nearest 0.25. So it will be 0.13 and it is 8. So 0.14 it will be. 75.14. So which is the nearest one? So 75.14 is 75.25 nearest. Okay, 75.25 nearest one, which is the nearest to this 0 and 25. So 75.25. Okay. So this is your final answer. 75.138. This is your final answer. If they ask you to round it off, you round it off to the nearest 0.25, whichever is nearest. Okay. Suppose if I get 75.19. So which is the nearest to 19? Who is near to 19? 0 or 25? So it is 25. So 75.25. Suppose if I get 75.03. Who is near to 03? Is it 0 or 25? So 0. So I'll round it off to 0. 75.00. Like that it will be. Okay. These are the 6 documents required in any export. Any export. Any. These 6 documents. 2I, 2B, PC. 2I, 2B, PC. What is 2I? 2I means invoice and insurance. Any export in the world. These 6 documents are required, minimum. Others can be anything. So 2I, 2B, PC. 2I means what? Invoice, insurance. 2B means bill of lading, bill of exchange. PC means packing list and certificate of origin. Okay. So 2I, 2B, PC. Who gives this? Invoice is given by, always remember, invoice is given by exporter. See, there are various bodies to this. Invoice is given by exporter. Insurance is given by insurance company, right? Insurance company. BL is given by shipping company. Shipping company. Shipping means the one who does the shipping. BL is, what is BL? BL is just a ticket that I have taken your material and I am taking it. Okay? Shipping company. Bill of exchange is given by exporter. It is drawn by the exporter. Exporter. Okay? Packing list. It is given by the exporter. What is packing list? What is packing list, everyone? Yeah. These are all you will be getting as a case studies over here. Okay, so you will be getting it as a case studies. Okay. What is packing list? Okay, I'll just explain you in 1 minute. What is packing list? Packing list gives you where the materials is kept in the ship. Very important list. Okay, so this is my ship. Big ship it is, right? You have seen that in the news channel, in the YouTube now, big ships are there. Now, if my material is kept over here in this ship, so will I go on searching the whole ship? No. So in this packing list, it will be mentioned where my material is kept. In this section of it's like the railway compartment. Suppose if you go to get any relative of yours on any railway station, do you check the whole railway? No. You have the bogie number, you have the seat number, right? You'll check there only. Same thing is over here. The year you'll have the bogie number, the seat number, and you'll get your material from there. That is packing list. What is CO? CO is certificate of origin. CO is certificate of origin. Certificate of origin means what? This is a document, okay, given by Chamber of Commerce. Chamber of Commerce. Okay. What is Chamber of Commerce? Chamber of Commerce is a body formed by the renowned persons of the society. Some 15-20 persons come together and they write it over there that these goods have been manufactured in Bharat. These goods have been manufactured in Bharat, or these goods have not been manufactured in Bharat. Okay. So they will give you, this Chamber of Commerce will give you the authentication that whether any goods have been manufactured in Bharat or not. And these are renowned persons. They never give you fake answers. So remember, how many bodies are there? One is insurance company, second is shipping company, third is Chamber of Commerce. So even if, remember, this is the exporter, there are 4 bodies, right? Exporter, insurance company, shipping company, and Chamber of Commerce. Even if this exporter tries to do some fraud, see here, there can be a fraudulent exporter also. If an exporter tries to do some fraud, then also this insurance company, shipping company, and Chamber of Commerce, they won't be doing the fraud together. These are separate companies. So that's why the frauds are prevented in LCs. Okay? Chalo, next one. This is a 1 mark question. A retirement of import bill of GBP 50,000 by TT margin 0.2%. Ignore the cash and premium, discount and premium. GBP to USD is 1.395575. USD to INR is 55.0618. Compute the rate for the customer. Simple, eh? See this. Retirement of import bill for GBP 50,000. Again, Forex problem, follow the 3 steps. Buy or sell, forward margin, and TT spot. TT means TT margin. Okay. So now, what is this buy or sell? Firstly, import bill, GBP, blah, 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 everything is given. So is this buy or sell? Who can tell me? Is this problem about buy or sell? You are doing import. Import means sell. Okay, just now I told you, import means sell. So you'll be doing the selling. So selling, done. Chalo, right there, sell. Buy or sell. First step is sell. Sell means what? You'll have to take all right side, no left side. Forget the left side now. Okay, so everything is right side. Okay. Next is forward margin. Forward margin. What is given? Retirement of import bill, this by TT margin 0.2%, and these rates are given. Is there anywhere given that after 1 month, 2 months, 15 days, something like this? 1 month, 2 months, 15 days, nothing. I am having some import bill. I have to retire it. Retire it means what? I have to pay. Retirement means payment. So I have to pay. So this I am doing on the spot only. This I am doing on the spot. So spot means what? Nothing related to forward. So this forward margin is 0 over here. 0. Okay. Look, TT margin we'll do it later, afterwards. Third, always remember, third step, keep it for the last. But never forget. Okay. Otherwise you'll forget this. For the last, we solve the problem and then we forget. So now let's focus on first 2 steps. I'll be taking the sell rate. Now what do I want? Rate for the customer. Rate for the customer means this is my, the transaction is happening in our country, Bharat. So, rate for the customer is what? GBP to INR. See here, you require GBP to INR. Pounds to rupees. Okay. But do you have this rate? GBP to INR, do you have it anywhere over here? Not having. You have GBP to USD and USD to INR. These two rates are there. So you'll have to use the chain rule. This is called as the chain rule. Okay? Chain rule means what? GBP to INR you require. So what do you do? GBP to USD into USD to INR. GBP to USD into USD to INR. Okay? So GBP to USD is what? That you know. 1.3955 or 75. Import, sell. So 75. 1.3975. Say this. 1.3975 into USD to INR. 55.18. Okay? 55.18. Always right side. Sell. Import. So multiply them. You'll get it 77.114. 77.114. So this is your second step over, forward. Now focus on the TT. TT. Now TT is what? What is given TT margin? 0.2%. Remember, percent. Never forget this percent upon 100. So 77.114. This was your answer in step number 2. Into 0.2 upon 100. 0.2 upon 100. Never forget this upon 100. Otherwise your answer will go wrong. Okay? So 77.114 into 0.2 upon 100. So it is 0.154. So this is my TT margin. What will I do with this TT margin now? This TT margin I will do 0.154. I'll add this. Why? Because selling. What did we say earlier? TT margin for sell is add. And for premium, for that buying it is minus. So I'll add this. 77.114 plus 1.154, 77.268. This is your final answer. 77.268. Okay? Got it, everyone? Clear? Move on. Okay. Now what you do? You guys will give me the solution for one of the problems. Hold on. Now you guys will give me a. Everyone take 5 minutes and solve this. Retirement of the export bill. 50,000. TT margin 0.2%. Ignore cash premium 1.395575. 55.0618. Compute the rate for the customer. Export. This is export. Same problem. I have taken it for export. Now you give me the answer. I'll wait for 2 minutes. Hardly 2 minutes, not more than 2 minutes. Everyone, try it yourself. Correct, Neelam, buy. Export means buy. Correct. First, decide on the 3 steps. Buy or sell, forward margin, and TT margin. So, buy or sell, buy. Forward margin, 0. So, here you will be using GBP to INR. Same chain rule. Find out the rate. I am having the answer. Sunil Jana. Okay. $76.989. No, Sunil, slight difference. Huh? Slight. Last step you have made a mistake. Remaining is right. Okay, yeah. Correct. Neelam, you are right. You just multiply this and get it. Okay. Last step you have made a mistake, Sunil. Almost you are right, but last step error. Correct. Who's this? Sharad Kumar. You are right. See, this is the answer. This is the answer, export bill. Look at this. 76.836, this 1.3955 into 55.06. Okay, so 76.836. Again, multiply this 0.2%, so 0.2 upon 100, 0.153. Now this is export, so buy. Buy means subtract. So I'll do subtraction. 76.836 minus 0.153. So it is 76.683. This is your answer. 76.683. Got it? Got it, Sunil? Slight mistake was there, slight error. Okay? 76.683. Okay? This should be your answer. Okay? Okay, chalo. Let's move on now. Now this is something new for you. This is a theory part. Something new. We always know LIBOR. LIBOR, we have studied. What is LIBOR? LIBOR is the rates. Base for the rates for the forex. But now what has happened? RBI has told that you don't use LIBOR. So this question is asked in exam about ARR, alternative reference rate. RBI has told the banks that you should not use LIBOR now. Earlier, we were all using LIBOR, London Interbank Offer Rate. London Interbank Offer Rate. So now what has happened? RBI has told remove this LIBOR. Don't remove your dependency on LIBOR. Means अंग्रेज LIBOR London अंग्रेज हटा दो इनको अंग्रेजों को. Simon go back. Okay. So now RBI has told Simon go back. No more LIBOR. We'll be doing our rate calculations based on the 5 currencies: CHF, Euro, GBP, USD, and Yen. So these are the 5 currencies we are using as a base. So this is known as ARR, alternative reference rate. Alternative. Okay. So national working groups for each of the 5 LIBOR currencies have identified alternative transaction based and robust benchmarking. Okay. You only remember this much. You don't go into details over here. Remember, LIBOR is being replaced by alternative reference rate, and there are 2 more things to remember. LIBOR includes component of bank's credit risk, whereas ARR are risk-free. Means what is the advantage of ARR? ARR is risk-free. It is not eligible for any credit risk. Okay, so it is risk-free. It is better than LIBOR. Number 2, ARR is recently, means up till now, published in overnight only, whereas LIBOR is having 1, 2, 3 months. Even ARR is having further now. This was the earlier stage. Now even ARR is having 1, 2, 3, 1, 3, 6 months and 12 months. So you remember the important point, LIBOR has been replaced by ARR now. So get this next one. On 15th December, customer presented a side bill for USD 1 lakh for purchase under LC. Transit period is 20 days. Exchange margin is 0.15%. The spot rate is given as 34.8090. January differentials are given as 0.65657. February is 1 and 0.97. March is given as 1.40, 1.37. Now you have to answer the questions based on this. In exam also you'll get this case study and they'll be asking you questions. 5 marks questions. Okay. So now, what is given? Customer has presented a side bill. Side bill means what? See here, there are 2 types of bills. Sight and usance. Sight means what? Immediate payment, today only. Usance means what? Future date payment, future. after 10 days, after 15 days. Okay. For site, we always use generally TT rates or spot rates. Site, we use spot rates. Okay. And for usance, we use the forward rates. Now, your customer has presented the site bill for USD 1 lakh for purchase under the LC. Transit period is given as 20 days. Here, it's given as 20 days. Transit is given. Transit means what? Transit means basically this bill will be maturing after 20 days. So 20 days means what? It is a future date payment. So I'll be requiring what? Spot or forward? I'll be requiring forward. Exchange margin is given as 0.15%. The spot rate is given as 34.8090. Forward is given as 1 month, 2 month, means Jan, Feb and March. This is 15th December. Okay. So 15th December the transaction is happening, and the forward rates are for January, February and March. Okay. So how will you solve this now? 15th December this customer has come and 20 days is the transit period. Say this, 15th December and 20 days is the transit period. So add this 15 plus 20. 15 December plus 20. It will be what? 25 December and 5 January. But December is for 31 days. So it is 4th January. Okay. So my maturity of this bill will be on 4th January. Right. So maturity of the bill 4th January. Again, never forget the basic. Buy or sell, forward margin and TT margin. You should never forget this. Buy or sell, forward margin, TT margin. Don't forget it. Okay. So now, January what? 4th January. Okay. 4th January over here. So which rate will I use now? Look at this. 4th January. So 4th January lie between what? 1st January and 31st January. It will always lie between 1st Jan and 31st Jan. Right? So now you have to get the rates of 1st January and 31st January. You'll have to get the rates of 1st Jan and 31st Jan. So let's look at it. What rates do you have? See this. The rates given over here are January is given as 0.6557. Now look at this. 6557 means this currency is in what? Premium or discount? 0.6557. Everyone, pay attention and answer me. This currency is in premium or discount? 0.6557. It is in? Correct? It is in discount because the right side is smaller. Discount, right? So discount means immediately it should strike your mind. Minus. You have to do the minus. Okay? Discount means forward rate minus. So now what should I use? January is 0.6557 and February is this 1 and 0.97. So which one will I use now? What do I want? I want the rate for January. Means my transaction is happening on 4th January. So I want it 1st Jan and 31st Jan. So always remember one point, very important point. The important point is when your rates are given to you, let's say January rate. So the January rate is always at the end of the January, end. So this January rate will be on 31st Jan. This rate will be taking on 31st Jan. So you have taken 31st Jan this rate, 0.65 over here. Okay, 0.65, 31st Jan. But what is this first rate? 15th December. Here, I have this 1st Jan. I want the 1st Jan rate. 31st Jan I have got it. But what about the 1st Jan rate? For 1st January rate, it is not given anywhere. So what do? Whenever I am not having the 1st January rate, I'll go back. Which rate I am having the closest? Which rate I do have the closest? I am having the closest rate of spot. 34.80. So I'll be using this spot. 34.80 over here. Same. Okay. Look at this. 34.80. This is my December rate. December spot. So this same spot I'll be taking to January. Whenever I don't have the rates, I'll be taking the closest rates behind. So 34.80. Okay. Got it? So 34.80, and now you have got the two rates, 34.80 over here and 34 point, this, what was that, 65? 0.65. Okay, so you have got this 0.65 over here. But what do you do with this 0.65? This currency is in premium or discount? This currency is in discount, right? Because 6557, right side is smaller. For discount, whenever your currency is in discount, you will subtract it. Subtract from what? Subtract from what? Subtract from the spot rate. So what was my spot rate? 34.80. Minus this point, what is this? We want purchase, na? Yeah, minus 0.65. So 34.80 minus 0.65. So it is 34.15. So now what are the two rates which you are having? January you won't do anything. Your January is same rate. So two rates you are having is 34.80 and 34.15. These are the two rates which you are having. 34.80 and 34.15. Okay. So now, which one will you take? You will take 34.15. Buy low. You will always buy low. You are buying over here, right? It's a export bill, side bill for purchase. It's clearly mentioned. Purchase. Purchase means you are buying. So use this 34.15. Multiply this 34.15 into 0.15 upon 100. So this is up to forward. Now this is step number 3. TT margin 34.15 into 0.15 upon 100. So you'll get it as 0.051. Now what do I do with this 0.051? Add or subtract? I'll subtract. Why? Because I'm buying. Whenever I'm buying, TT margin is to be subtracted. So 34.15 minus 0.051. Get the answer, 34.099. Okay, or you can take it, round it off, 34.01. So this is your final answer. This is your final answer. Got it? 34.01. Okay? Clear everyone? 34.01. Got it? Now let me do some theory. Let me explain you some theory. Many of you get confused over here. Pre-shipment, post-shipment, pre-shipment, post-shipment. Should I use what rate, what this? So remember, there are two rates for you. There are two finances for the exporter, always. Always remember, there are two finances for the exporter. One is pre-shipment, second is post-shipment. And there are two finances for the importer. One is buyer's credit, second is supplier's credit. Get it very clear in your mind. Okay? One sec. Let me draw it and show you. See this. Always in your lifetime, you remember one basic. For exporter, it's always two finances. Exporter and importer. Okay? There are always two types of loans to both of them. For exporter, it is pre-shipment, pre, and post-shipment, post. Shipment we call it, shipment. Means after the shipment, before the shipment. And for importer, there are two things, two loans. Supplier's credit and buyer's credit. Always remember, don't get confused between these two. Okay? Importer will always have buyer's credit and supplier's credit. Exporter will always have pre-shipment and post-shipment. Now what is pre-shipment and what is post-shipment? Pre, see the shipment and pre. Before the shipment, whatever I do is known as pre-shipment. After the shipment, whatever I do is known as post-shipment. Means once I put the goods in the ship, this is my ship, this is the sea. Once I put the goods in the ship, and after this ship leaves, so this is post-shipment. Before that, it's pre-shipment. Okay? For pre-shipment, we always call it packing credit. Loan is called as packing credit. Okay? Now, let me come to this again. Pre-shipment, it's called as packing credit. So remember, pre-shipment will be always given as before the shipment. Okay, number one, before. So this will be always before means what? What is this required for? I'll have to before shipping. What do I do before shipping? I'll manufacture the goods. So pre-shipment is always given for manufacturing. Is always given for manufacturing. Okay, means here I'll be requiring labor, this raw material, everything I'll be requiring, right? So that is pre-shipment finance. And this pre-shipment is always given on, it is given as 75 to 80% of the order value. 80% of FOB order value. Remember, pre-shipment is always given on FOB. What is FOB? Free on board. Pre-shipment is always given on free on board, FOB. What is free on board? This is an Incoterm. Total 11 Incoterms you are having. Okay. Xworks, FOB, FAS. Okay. Many are there. Okay. So Incoterms, I'll show you the image later. So this is pre-shipment is always given on FOB. Post-shipment, it is after the shipment. Means once the goods are gone. Okay, goods are gone in the ship. Goods gone in the ship. Gone means not gone, huh? In the ship. The ship has left. So it is always given as 100%. And it is not on FOB or anything. It is on any Incoterm. It's completely 100%. So pre-shipment is generally 75 to 80% of FOB. And this is 100%. How to come to FOB? Here, three main Incoterms which you will be having is FOB, two main, not three actually, and CAIIB. Okay. So if you want to come to FOB from CAIIB, what you have to do is you'll have to subtract minus insurance. See, I means insurance and freight. Okay. So these are the two things you'll have to subtract, and plus profit. You'll have to subtract the profit also. Profit. So when you have to come to FOB from CAIIB, so CAIIB minus insurance plus freight minus profit. All these figures will be given to you in exam. I'll be taking one numerical today if possible or tomorrow. Okay. Second is CFR. So if it is CFR, then what? Cost and freight. FR means freight. Here it is cost, insurance and freight. So here I'll have to subtract freight. No insurance over here. Freight and minus profit. Profit is always subtracted. It's given to you. Okay. This is all about this FOB, CAIIB, CFR. Okay. Now, always in your pre-shipment finance, you will get one term called as order. Means what? In pre-shipment, you will always get LC or order. Order. These words are important. Whenever you get this word LC or order, remember it is your pre-shipment finance. And in post-shipment finance, you will always get the word as bill. Bill. Bill means bill of exchange. Bill means bill of exchange. Okay? Yeah. FOB means cost of production. You can say that. Yeah. Roughly. So in export, you will always get, for post-shipment, you will always get bill of exchange. And for pre-shipment, you will always get LC or order. Okay? So done this one? Yeah. This is some theory which I always take generally. Let me see if any other theory you require it. Yeah, one more theory you require it. See here, we are in the fast batch. So that's why full coverage is not possible of that portion. We'll be trying to do the maximum part of this. See this, pre-shipment, post-shipment. It is also called as packing credit. It is for manufacturing percent also. Okay. End use is to be tracked. Very important point. In pre-shipment finance, you will have to track the end use. This end use is to be tracked. It is always given on FOB. Post-shipment finance, 100% finance is given. No end use tracking. This question comes in exam. End use is tracked in which type of loans? So it is tracked in this pre-shipment. One more term is called as NTP. This term always comes in your exam. Again, NTP. NTP means what? Normal transit period. What is this normal transit period? Transit period means the time it requires for the documents to travel. Here it's related to documents. It's not related to goods. Many of us think that it is goods. It's not goods. It's documents to travel. Documents means what? What do you mean by documents? Documents means it's like this. Okay, let me go back to the earlier part. What were the 6 documents? 2I, 2B, PC, right? So these documents are submitted by the exporter. They are submitted by the exporter to the bank. Which bank? See this. It's like this. In every import and export, there is a seller, there is a buyer. Or this is called as exporter, this is called as importer, right? So this seller will send the goods or export the goods and prepare these 6 documents, and then he'll submit it to this bank. This seller will submit it to the bank. So these documents, now this bank will do what? Indian bank. This bank will take the documents from here and send it to the USA bank. It will send it to the USA bank, right? So once it sends it to the USA bank, this period is known as transit period. This period is known as transit period. Okay. So this is known as NTP. Generally, FEDI says it should be around 25 days. If in the exam it's given that it is 20 days, 15 days, whatever it is, then you take that only. If it is not given, then you have to take it 25 days. Okay? Got it? Chalo. Next one. Now this is a bit difficult case study. This is a bit difficult, and every one of you should pay attention. Otherwise, it will go tangent to your head. If you don't pay attention, it will be tangent. It's very difficult one. What is given? Yeah, look at this. The forex dealer of KBC Bank sold GBP 20,000 in the interbank market at 83.75 in cover of import. So sold, okay? He has sold GBP, done selling. TT recorded by one of their branches. Subsequently, it was detected that the transaction was erroneously reported twice by the branch. Hence, the sale had to be cancelled. The interest rate at the time of cancellation was 1 GBP equals to 83.6875, 7275. These were the two rates. Okay. The interest rate at the time of cancellation. Okay. 1 month forward is given as 1 GBP equals to 83.7383. This 83.73 and 77. You can take this 73 and 77. Here 83 is given 2 times. It's not required. Even if they give you this much only, 83.7377, then also okay. Brokerage of rupees 1000 for each sale and purchase transaction is payable. So this much is your question. Now various 5 questions will be asked over here. What is the amount received in the original sale transaction by the dealer? Now firstly understand what has happened. Okay. There is a bank of KBC Bank, right? It has sold the GBP. 20,000 GBP it has sold in the market. But now the problem has occurred. Means this is a head office. Head office has done this transaction. 20,000 it has sold. But it has sold 2 times. Why 2 times? Because this branch of theirs, one of their branch, had reported to them that see, we have to sell GBP 2 times. So that's why they sold 2 times. So whose mistake is it? Is it a mistake of the bank, or is it the mistake of the head office, or is it the mistake of the branch? It is a mistake of the branch, because erroneously reported twice by the branch. Branch in its Excel sheet or in its whatever software, it has reported it 2 times, whereas it was only 1 time. So now what will you'll have to do? You have sold it. So now one transaction will have to be cancelled. Okay. So now how will you do this? See this. What is the amount received in the original sale transaction? Original sale. Now let's look at it. Firstly, what it is? 20,000 GBP. Okay, sold. What is the rate to be taken? 83.75. Done. So 20,000 into 83.75. This much rate I'll take. So it is 16,75,000. Okay. So this is my answer. But is this my final answer? No. I am having TT margin also. TT margin is what? TT margin is given as 1,000 per transaction, right? 1,000 per transaction. So what is my 1,000 per transaction? I'll add this 1675 plus 1,000. So it is 1676. Right? 1676. So this is my answer. This is what I'll be getting in this. I've sold this. So I'll be receiving the rupees. So I'll be getting 1676,000. Getting it, everyone? Okay. So now this, what is the first question? What is the amount received in the original sale transaction? So this 1676 is my amount received. Okay. Got it, everyone? From the shipment of goods or from the BL date? It is from the shipment of goods. Purnima. 21 days is from the question asked is, from where do I take 21 days? 21 days or 25 days. These 25 days are taken from the shipped on board date. Shipped on board date is the date on the BL that the ship has left on so and so date. From that, these 25 days are to be taken. Okay. So now this is my answer, 1676,000. But this is my wrong answer. My right answer is 50,000. Why is this right answer? And why is this wrong? Because I've got the calculations correct. But this is my wrong answer. This is my wrong answer, and this is my right answer. So why? Can anyone tell me? Think over it. This is my wrong answer. Even though the calculations are correct, then also the answer is wrong. Why is it that this is wrong, and why is that 33,50,000 correct? Can anyone think of this? Look at the problem. It's given in the problem only. Yes, correct, Neelam. 2 times. It's given the branch has recorded it 2 times. So I have sold this 2 times. So if I have sold this 2 times, I'll be getting double money. 1676 into 2. So roughly it will be 33,500. Okay. So I'll be getting 33 lakh, and what is this? 50,000, whatever that amount is. Okay. So that's why I have sold it double. Say this. Twice by the branch. So this will be my answer. Okay. See, it works like this. This branch, treasury, there are thousands of branches. All will report it to the treasury. If they are reporting it wrong, then treasury will act wrong only, right? What rate will be applied for cancellation? Now cancellation, see this. First you have done this error. So now you have to cancel this. So while booking this contract, which rate did you apply? While booking it, you are selling it, import. So you applied this TT selling rate. Whenever we sell any transaction, we apply the TT selling rate. So now what have I to do? I have to cancel this. Cancel this means what? The interest rate at the time of cancellation is 83.6875 and 7275. 1 month forward is also given, 83.7377. Brokerage this. Now, which one do I take? Cancellation rate. Do I take this interest rate at the time of cancellation was this, or do I take 1 month forward? So it's clearly mentioned. At the time of cancellation, it is this. So I'll be taking this TT buying rate. So what is this TT buying rate? This is my TT buying rate, 83.6875. This is my TT buying rate. Okay. So here I'll take this TT buying rate. How much has to be paid to the dealer at the time of cancellation? So while cancelling, how much do I pay back to the dealer? Means, what do I do? Why am I paying back? Because I've got this 2 times. Earlier, 2 times I've got the money. But do I require it 2 times? No. I require it only once. So one I'll have to give it back. So that giving it back will be done at the rate at that time. Whenever it comes for cancellation, 68.75. So I'll multiply this 20,000 into 68.75. Okay. So multiply this, you'll get it 68.75, something 83.68. See this 1673,750. But is this your final answer? No. Why? This is not your final answer. Why? Because there's a TT margin over here. What is the TT margin given? 1,000 per transaction. See this brokerage of 1,000 per transaction. So now what will I do with this brokerage? In earlier transaction I added this one, because it was sale. Now I am doing a reverse transactions. Understand this. I am doing, firstly I had sold this. Now I am doing reverse. Reverse means I'll do the reverse here also. So it was sale over here. Now I'll buy it. So whenever you have to cancel a sale transaction, you have to buy the second one, right? So cancelling the sale means reversing this means buying it. So for buying, what do we do with the TT margin? We always subtract. So that's why I've subtracted it over here. So it is 1673,750 minus 1000. So 1672,750. Got it? So I'll subtract this 1672,750, and that is your answer. See, look at this 1672,750. Got it? This is your answer. Got it? Next one. Everyone is getting this? Then only we should move forward. If you are getting it, then only move forward. Otherwise, it is tangent. Okay? There shouldn't be a tangent. How many are from science background, engineering background? Tangent you learn. In fact, in your school also you have this tangent, right? Everyone is having this tangent, right? Why TT selling rate for cancellation? TT selling for cancellation? Yeah, we have taken buying only. We have not taken selling. See this. What is the rate we have taken? 83. See this 83.6875. This is what we have taken. This is a buying rate. Okay. We have not taken the selling rate. See this 68.75. Because it's given over there that at the time of because it's given over there that at the time, see there in the problem it's clearly mentioned. See here, what is this given? Where is it? 1 month. The interest rate at the time of cancellation was this. It's mentioned at the time of cancellation was this. So if it is cancellation, it's mentioned, then take the same rate. Okay. Now next, how much loss or gain on one cancellation of GBP sale by this person, whatever it is. So how much is the loss or gain to the bank or let's say to the dealer? So how much money did this person see here? First transaction was what? First transaction was sale, right? So he has sold this. Understand this now. There is a bit of confusion in this problem now. Understand it properly. First transaction was what? First, initially, this transaction was sale. Okay. So we'll consider only extra one. Extra. We won't consider both now. Only extra we'll consider, because what is right is right. So first transaction, what did he do? 1676,000. So did he receive this money or did he give this money? It was a sale transaction. So sale means what? Dollar had gone out. Dollar out and rupees were in. Rupees were in for the dollar, for the dealer. So this is my dealer or bank, you can say. See here, you can call this dealer, bank, anything. So dollar was out from the bank 2 times. Okay. So we'll do that one time which was there, which was correct, let's leave that. Okay. Whatever is wrong, only consider that. So now what has happened? Dealer has given given this dollars something, whatever those were, and taken rupees. So now rupees are in. Dealer has received the rupees in first transaction. But at the cancellation, what did we do? We buy. We did the buy transaction. So now what will happen? In this case, the dealer, right? So buy means what? It's a reverse transaction. Now dollar will come in and rupees will go out. So rupees loss and profit is always on the rupees, because net it's your rupees which you'll be reporting. So how much had this come in earlier? 1676. How much are going out? So going out is 1672 750. This much is going out. So I have received 1676. I'm going out is 72 75. So my difference is what? 1676 000 minus 72 750, that is 3250. This is my difference. This is my profit or loss. Profit, because I have received more. Right? So I have gained over here. Got it, everyone? I have gained. The dealer has gained. Bank has gained over here. Okay? Got it, everyone? Bank has gained. Clear? Next one. Next problem. Yeah, one sec. Just hold on. Now this problem, let me ask you. One second. Let me make this, give me 1 minute. I'll make this problem tougher. Hold on. Yeah. 1 month equals to 35, 40. 2 month equals to 55, 60. Chalo, that much. Okay, now I've made this problem a bit tougher. Inflow of USD by TT credit, okay, to the exporter's account being advance payment for exports. What rate will you quote for the customer if the market rate is 48.0911 and 1 month is given as 35.40 and 25.50? So this is your basic problem. You have received inflow of USD 1 lakh, okay, by TT margin, by TT credit. So inflow, funds have come in, okay. Rate is, this is, okay. Now you, in these three rates, tell me which is the spot rate. In these three rates which is given, okay, it is born loss here, Sunil. It will be borne by the whichever party which is having it, okay. So your bank is having the profit. So bank will bear it, means bank will get the money and customer will lose it, okay. In this case, customer will lose this money and bank will earn this money, okay, Sunil. Chalo, move on. So now you tell me over here in this problem, which is the spot rate? Among these all rates given, which is the spot? And what spot will you take? Answer me this. Which is the spot rate? Who can give me? $48.0911. Okay. Richa, you are right. What about which rate should I take? 48.09 or 11 as a spot? Correct? 09 it is. Because left side. Why left side? Why left side? Because you are doing the export transaction. Export, always remember, export is always buy, left side. So 48.09. Okay. But what about this 1 month, 2 month? That is also given. Okay. Export equals to buy. Correct. So it is 1 month, 2 month. So what should I would do with this 1 month? Should I add this 35? This now, see here, this 40 and 60 are over. Okay. They are of no use. 1 month, 2 month, 40, 60. Only I have to look at 35 and 55. So what do I do with this 35, 55? Should I add it or should I subtract it? Should I add this or should I subtract this? 1 month and 2 month. It's by transaction. So, and premium. So will I add this or will I subtract this? How will I find out the rate for that customer? All of you give me the rate for that customer. Final rate. Everyone give me the final rate. Let me see. Very easy one. Everyone give me the final rate. Give me the final rate. 48.44. Okay. 48.44. 48.44. Many of you have got this. Is it something given like this that is it 48.44? It should be simple, very simple. It should be 48.09. Simple. See here. The answer is 48.09. Rate to be quoted is 48.09. Why 48.09? This 1 month and 2 month are of no use to you. Zero use. Why? What is the problem? Look at this. There is some $1 lakh coming in to the exporter's account and I have to just convert it. Nothing else. $1 lakh is received today. See here, today. Let's say you go to the branch today morning. When you go to the branch today, some customer comes to you and says that, see this, I have received this $1 lakh now. $1 lakh I have received. Now what do? You convert this $1 lakh and convert it to rupees. So if this customer comes today, no forward, nothing. Today I have to do this transaction. So I'll be using the spot rate. What is my spot rate? 48.09. What were the three things I told you? Buy or sell. Right. Second one was that what? TT margin, forward margin. Forward, buy or sell, forward and TT margin. These were the three things, right? So what is this? Buy or sell? Export. Export means buy. So I'll be using buy. So buy. What about the forward margin? Nothing forward margin. Today only. The transaction is to be done today. Today means today. So forward equals to 0. TT margin not given. Is anything TT margin given over here? 0. Nothing. So simplest problem. 48.09 over. And if they ask you what is the amount will be what? 48.09 into 1 lakh. Okay, so it is 48 lakh 9,000 something it will be. Okay. So will you credit this to the customer or will you debit this to the customer? Correct? Will you credit this or will you debit this to the customer? Correct? Credit, because it's an export. Always remember basics. In export, you will always credit it to the customer. Export credit. Okay, because it is his money, not your money. See, whatever $1 lakh you get it, this dollar is not your money. That money is of the customer. He has done the exports. So you'll have to credit it to the customer. Okay. Got it, everyone? Chalo, we'll stop over here today. Okay. Hope so you have gained something out of this. Okay. Remember these three basics. Always in any forex problem, buy or sell, forward and TT margin. Never ever ever forget this sequence. First buy or sell, second forward margin, third TT margin. Okay. So we'll stop over here. But before going, those who are watching on YouTube, okay, those who are watching on YouTube, kindly join the batches, this revision batch. Okay. Next class, same time tomorrow morning. Tomorrow morning, again the same class. And today evening, remember, those who have not joined up till now, today evening, ABM is starting. ABM, similar. ABM is starting tomorrow, today evening, 7 to 8:30. I'll be only taking module A and C, will be taken by me. So do join this ABM batch. How to join this? Let me show you. Go to Adda 24/7. Say this. Go to Adda 24/7. I'll always go through the app because there is a coin system over there. Okay, that will give you some advantage. So JIB and CAIIB, click on JIB and CAIIB, click on CAIIB June 24. See this revision batches. Click on this revision batch. Okay. See this. What are you getting? Ebooks, test series, online live classes, expert faculties, interactive classes, recorded videos, limited size batches. Even these ebooks are of great use to you. Huh? Those who have joined the paid classes, you guys also, kindly follow the ebooks. In ebooks, you are having all these chapter wise, and click on this chapter. You will be having subject. Click on this subject, you will get it chapter wise. So ebooks are to the level of chapter wise. Okay. Similarly, tests are also module wise and chapter wise. In such details, you are having it. So that's why join this ASAP. Those who have not joined it up till now, watching on YouTube, kindly join this and use discounts are also used going on. Click on this buy now. Look at this. Put the code Y432. Click on apply. So 79% off you are getting right now. 79 plus 1% using this app. So 80%. Okay. Similarly, if you guys join the Mahapack, many of you might be planning for the November also. Some of you plan for the November, right? Next season. So if you want it for the next season, click on this Mahapack. Mahapack is one of the best options. 15 plus batches you get it. 15 plus batches. English, Hindi, all these batches. Okay. Plus double validity is going on. You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. Those who have joined a single batch, you can also upgrade to this now. You can upgrade. Speak to that admin guys. Okay. And you can upgrade it. Double validity offer is going on. And plus 80% off. 80% off is there. See this. Put the code Y432. See here, this code Y432 will give you the maximum discount. Okay, 79% plus 1% extra. Okay, on the app. So join it ASAP. Okay, 6 to 7:30 a.m. Sharat, it is 6 to 7:30 a.m. Okay, 1.5 hour batch. This is. Okay, and today evening it is 7 to 8:30 p.m. 7 to 8:30 p.m. Okay, chalo, bye everyone.